when you're looking at an organization, a fintech, a crypto exchange, the technology and all of that stuff is great. That's what you're buying. But if that is not built with the mindset or the culture of compliance, or compliance is handled separately, that's a red flag because it's going to impact your future innovation and growth. It is definitely going to impact your growth because at some point you're going to get either fined or written up, where then you take a couple of steps back to fix it to go get back on track. So that's why we always say to our fintechs, to even credit unions who are now turning into BaaS organizations, let's start thinking about compliance differently. Let's start thinking about compliance as a strategic driver of growth rather than tick box exercise.
Hey everyone, welcome back to the Ignite podcast. Today we are thrilled to have Ravi de Silva on the program. He's the founder of DeRisk Partners, former global head of compliance testing for financial crimes at Citi. He's held senior roles at JPMorgan and American Express. I've heard of those companies. At DeRisk, he's now helping financial institutions from banks to fintechs navigate risk with cutting-edge compliance strategies. The firm, built by ex-execs from some of these companies, including Citi, Goldman, and Barclays, is expanding to EMEA and developing an AI-driven platform to modernize compliance for smaller institutions. Ravi's here to break down what most startups get wrong about BaaS, AI, and global sanctions. Thanks for coming on, Ravi.
Thank you very much, Brian. Thanks for having me.
Your career is spanned lots of different roles, and it seems to have this through thread of compliance and risk. Maybe you could talk about, the beginning, how you got into this, and talk about your journey to going out on your own.
Sure. So when I graduated back in Sydney, Australia, I went into IBM to start doing functional SAP consultancy. But, I was in a big program. I hated programming, so moved on to become an accountant like my parents are. So as trying to become an accountant, you end up working for the Big Four. Deloitte was the firm that I went with. And when I interviewed with Deloitte, I wanted to actually get into forensic accounting. Obviously, at the time, the partner was like, yes, of course, you'll be doing forensic accounting. Join us. Since joining the risk practice, until today, I have not done forensic accounting. Brought me into doing risk management, so process re-engineering, internal audit, that kind of work. And that's how, from internal audit, got into compliance, and that's how I got into the compliance world.
Let's talk about the transition. You were at Citi and JPMorgan. How did that shape your perspective of what you're working on now?
Sure. So at Citigroup, I was leading a larger global organization, and this was sitting right in between the regulators, internal audit, and the first line. When we talk about first line, it's the business. Right. And it was a lot of managing stakeholders. And I treated a lot of my frontline, first line stakeholders as clients, as my third line partners as well as clients. So it wasn't a big transition moving from Citi from these roles into a more entrepreneurial role. I managed
smaller office.
Yeah, it's a smaller office.
I have to go all the way up the elevator.
Exactly. I managed a lot of my work when I was at Citi and JP more on an entrepreneurial basis, treating stakeholders as clients and listening and solving their problems. So it just gave me a sort of a view into what can be a gap in the market, and that's how sort of DeRisk was sort of envisioned.
What was that aha moment that led to the launch of DeRisk?
I think it's mainly the capacity of small, medium-sized, and startup organizations not being able to afford the type of compliance that they require today. So it's basically trying to make sure that we provide the same standard of global compliance, regulatory sort of risk management to the smaller organizations. Yeah, I would say before, even today, you find a lot of startups that are not focused on compliance. There are fintechs who are coming in. They start thinking about compliance when they have to. So when they go through a licensing program, they'll think of compliance.
They got a big enterprise deal, and this big enterprise deal says, okay, great, tell us about your compliance with X, Y, and Z. And you're like, let me go figure that out.
Exactly. and which is fine for a small an organization, but when you're growing up to beyond $1 billion in assets under management, you start to get attention from a lot of other regulators, right? So we serve a lot of community banks, credit unions that are in that position where they have compliance, but it's very light scale of compliance, which opens them up into a lot of issues around sanctions, AML, and other retail banking related compliance issues. If you talk about the startups or the fintechs that are in the market today, they're more educated around compliance than they have been 5, 10 years ago, but there's still potential for them to grow. So some of the fintechs that we work with, we bring in this concept called strategic compliance, which is where you don't look at compliance in a silo. You don't look at compliance as a checkbox activity. We look at compliance as part of a strategic growth driver for the organization. And some of the ways that my fintechs are using us is that, hey, Ravi, could you join us for some of the pitches that we're doing with organizations that they're selling their technology to? So I'm actually in the pursuit team as well as part of their fractional system.
You said that there's an AI audit gap here that could blindside these fintechs. What gaps should they be looking for, and how do they protect themselves? And I'm asking as a VC who invests in a lot of fintechs, right?
Yeah, yeah. So I think the gap around AI is the explainability of it, right? A lot of the regulators, from a compliance perspective, would look at your AI and try to understand if the AI is being biased. Is the AI actually creating the right result? Has the AI been fed the right data? Has it been fed? So, for a good example, is fair lending. If you're using AI technology for fair lending decision making, how did you train AI to get to that decision? Did you use the data set? What kind of data set did you use? So if you look at from that perspective, if you look at the global scene today, especially in places like Singapore, they still don't use AI in decision making processes. They use AI in the processing aspect of it, and the final decision is still made by a human. So that's a point that anyone can sort of fail in as you start growing your technology stacks.
That makes sense.
Misunderstand from a compliance perspective. I think so. The sponsor banks that we work with today are educated in terms of compliance needs, but where they will fail is, or where we see that they sort of lack, is the amount of due diligence that they want to perform on the partner that they bring in, right? Let's say the sponsor bank has its compliance apparatus covered up. We serve them as their fractional CCO. We take care of all the compliance needs that they have, but we don't have a view into the partner that they're bringing in, right? So when we are performing due diligence on the partners that they want to bring in, we actually go down to a lot of detail. It's not just the front end partner of that firm. We look into the actual owners. If the owners are overseas, we'll go down to that level of due diligence. Firms don't like to do that because they basically are worried that a deal might drop, but we would want to do that to make sure that that's actual solid deal, solid fintech, has no AML sanctions issues coming hidden, which then we'll have to deal with 3-6 months down the line after the deal comes to fruition.
That makes sense. So you've argued sanctions compliance is a risk for startups. What's driving that trend, and how real is that risk for startups?
I think sanctions is a big risk today. As soon as what happened this weekend with Iran and the U.S. attacks, we put together a playbook around how to deal with Gulf regional sanctions that are coming their way, and it's a playbook that talks about how to handle the first 72 hours, next 1 week to 30 days. And it gives you step-by-step processes on how to do that. Now, the reason that we're doing it is that you can trip over any of these new sanctions, not because you want to, because you did not know about it. And you didn't know the technicalities of how to apply that. You find a lot of fintechs today in the Middle East, in Europe, that deal with a lot of secondary sanctions, which are dealing with sanctioned entities indirectly, and that is a cause for concern. And I think sanctions is a pretty big deal that everyone needs to start thinking about.
So before the attack, did the U.S. have sanctions on Iran, or was it?
Yeah.
Or
No. They did.
they did? Yeah.
But what had happened is with the tax, there are further concerns around like ghost shipping, and there are certain trade corridors. It's not just sanctions. It's now something called export controls and trade sanctions that is more relevant today.
Yeah, and that's tricky to navigate, no doubt. I wonder how many sanctions there are. Like, how many countries have sanctions right now? You probably know off the top of your head with the U.S.
Not really. I mean, it keeps
Got to be
changing.
Russia, right? Got to be
Syria,
Iran.
Syria used to have
The
until like a
Syria
couple of
probably
weeks
had it at
ago.
some point.
I mean, there are a lot of not just sanctions countries, but there are sanctioned individuals within those countries. So a
Oh,
country might not be sanctioned, but then Brian Bell might be sanctioned
oh no!
within
Don't sanction me.
yeah.
Don't sanction me, bro. Speaking of which, you're starting to expand out into EMEA. You got a Swiss HQ. Apparently, you're sponsoring some AML and sanctions a summit in Dubai. That's exciting. What's driving the global demand?
I think when we talk about compliance and when we talk about fintechs and financial institutions in general, a lot of these financial institutions, even the US based community banks, they have global operations. They deal with global clients, and we are sort of focused on the crypto exchanges, the fintechs, and New York, San Francisco epicenters of fintechs. But you find the same sort of trend now in Europe, especially in Switzerland. There's an area called the Swiss Crypto Valley. That's where we are sort of placing ourselves as well. We are going to be headquartered or hubbed in Lucerne, Switzerland, which is going to support our practices in our operations in Dubai, Singapore. So Dubai supporting the Middle Eastern market, and in Singapore supporting the Asian market. Those are key locations. Dubai in itself and Singapore are huge in fintech and crypto exchanges, and that's one of the reasons that we've sort of gone down that route to expand. We see that opportunity. We want to grab that. Yes, we're new. We've been operating for about 14, 15 months. We have the capacity to do this. That's why we're doing that.
Yeah, that makes sense. And you're also building AI into your product. Maybe you could talk about who it's for and how does it change the compliance game.
Yeah, so when we talk about AI, we don't want it to be another conversation about, I mean, everyone and their mother is talking about AI today. And I just don't want to throw that word out there. Just,
Not my
oh,
kids. I get an
yeah,
eye roll every time I talk about it. It's like,
yeah,
what up, Dad?
yeah, exactly. So what we want to do is we just don't want to build something that is off the shelf. Our services are very relationship driven, very customized solutions that we provide to our
More
global.
of a like a professional services organization where you're kind
Exactly.
of like, we have some technology here and it's widely applicable, but each customer in this case is kind of unique, right? And so you kind of
Exactly.
have to take it by
So
case by case.
exactly. So if you look at a crypto exchange, and if you're supporting the back end operations of a crypto exchange that is today a manual operation, we'll take over that manual operation. And within the 12 to 18 months of taking that over, we'll automate that process. While we are automating that process, there might be some AI generated technology that goes into that automation. And all of that is run through our Swiss hub using technology and staff from our Switzerland office.
We actually have a portfolio company, Asset Reality.
Okay.
They're based in the UK. They help governments and institutions with seized crypto assets. So they
Okay.
might be somebody good for you to
Yeah.
talk to. Happy to make
Yeah.
that connection. The founder's been on the podcast a long time ago.
Oh, fantastic.
But yeah, they're doing pretty well. So as you expand, what's the hardest challenge about selling compliance in the startup ecosystem?
I think as I expand from a global sense, it's an American company coming into Switzerland. Everyone takes a step back going, hey, what are you guys doing here? That is a problem. It happens everywhere. I haven't seen that in Middle East though, but Asia might be a concern for that too. So we've sort of engineered certain ways of doing this. It's not a US company going to Switzerland anymore. It's a Swiss company that we're building with US affiliation, right? So same story with a lot of others. So that's one of the big ones. Second one is the principle of compliance. So if you take AML, the principles around
And
AML,
AML for the audience is
anti-money laundering and sanctions rules. If you look at it from principles and compliance controls perspective, they're all 90% of that is it's the same thing across the globe. But there's that 10% that is different from geography to geography. And that's the 10% that we obviously need to make sure that we get that right. So when we're in Switzerland, the Swiss law, that 10% is very different to something that you would deal with in the US or in the UK. So that's where we're building our knowledge base today. And for that, we obviously need to hire the right people, bring in the right caliber of people that we've done in the US, and sort of repeating that overseas. That's the main challenge that we've seen. In terms of selling the idea, selling the product, I think it's getting easier. People are understanding the importance of it. There's a lot of events, and you mentioned us sponsoring some of the events in Singapore, in Dubai. That's the reason for that. It's also brand awareness, but the topics are very well understood today. Even the small guy wants to hear about it, might not really apply it immediately, which is the concern, but they really understand. So there's no education as such that we need to give, but it's the affordability aspect that we need to communicate to these organizations.
Let's talk about VCs asking for a friend doing fintech deals today. What red flags should they look out for on the compliance side when they're evaluating startups to invest in?
Yeah, I think I always talk about this concept of strategic compliance, right? When you're looking at an organization, a fintech, a crypto exchange, the technology and all of that stuff is great. That's what you're buying. But if that is not built with the mindset or the culture of compliance, or compliance is handled separately, that's a red flag, because it's going to impact your future innovation and growth. It is definitely going to impact your growth, because at some point you're going to get either fined or written up, where then you take a couple of steps back to fix it, to go get back on track. So that's why we always say to our fintechs, to even credit unions who are now turning into BaaS organizations, let's start thinking about compliance differently. Let's start thinking about compliance as a strategic driver of growth rather than tick box exercise. So that's, I think, some for future VCs or VCs who are looking at these new organizations. Let's get that part of the strategic toolkit and not another tactical activity. Let's not do that. Let's not consider compliance as a tactical activity, but a strategic component of the business.
Makes sense. So what regulatory wave or blind spot do you think will catch founders off guard in the next 12 to 18 months? What's kind of on the horizon?
Yeah, I think if you look at what's happened in Singapore last week or so, they've had a crackdown of crypto exchanges in Singapore, and they've stopped giving sort of conditional licenses and whatnot. So I think MiCA is a regulation in Europe that's related to crypto exchanges. Very stringent, very comprehensive. I think it might be used as a blueprint for a lot of the other global regulatory activities. So I think the global, the US is thinking about crypto regulations as well, which we don't have today. But I think the MiCA and VARA in Middle East, those are two regulations that we should all sort of be familiar with and try to start building to support regulations of that nature as you build up your organization.
How does that relate, or maybe you could speak to, I think that it was the Genius bill that was just passed, kind of.
It wasn't passed yet, right?
I
It's
think
passed through
it got through
one
the
house.
House.
Yeah.
Yeah. So it's
Yeah.
not completely passed yet, but
Yeah.
it's looking promising. Maybe you could talk
Right.
about how much you know about that bill, and are you kind of hopeful we're going to have a more, upfront regulatory regime here in the U.S. for crypto where they can operate now?
I think we will. I think the fact that we didn't have hasn't really stopped us from operating. We, as part of our organization, we've registered multiple registered investment advisors in the US who actually manage crypto assets, and there's no real SEC regulation around it. So we've basically gone to the rule of thumb of transparency and disclosure being the key foundations or key sort of anchors of these organizations. So when we register them, that's how we've used it, and we've had SEC success and registration on those. But I think Genius Act is hopeful. I am not that close to the Genius Act yet. However, there's a lot of conversation that it might take the shape of MiCA and VARA in the Middle East.
So how do you balance speed and safety when advising early stage teams that are under pressure to grow and become venture scalable?
That's a very interesting question, because when you talk about compliance, speed is not something that you sort of match it up with. But in I always question why. I mean, there's if you look at compliance as a strategy, it's combined with speed. I mean, we put together frameworks within a matter of a couple of weeks, get them. I mean, especially when your organization is smaller, it's easier to actually implement compliance, implement frameworks, rather than you wait till it becomes large. And when you're large and you get a consent order from a regulator, that's when things become slow. So when you're young, when you're starting up, and when you're in the build mode, and you've started considering compliance as a strategic component of your growth strategy, compliance comes with speed.
Awesome. Well, let's wrap up with a rapid fire. I got about 10 questions for you. So banking as a service or embedded finance, what's riskier long term?
Embedded finance.
And why is that?
I think, I'm looking at it from an anti-money laundering sanctions perspective. You have finance embedded in X or any other social media tool. How do we onboard these clients? Are they sanctioned individuals? How do these people transact their payments, etc.? So that's thought process there.
I think I probably know the answer to this one, but US regulators or European regulators, who's tougher to deal with?
I would say European, actually. Did you think US?
No, I was thinking European.
Yeah.
Yeah. I mean, they always have like more stringent, more onerous, more red tape.
They
I
do.
mean, maybe under the Biden administration, it was a little tougher.
I've done a lot of global. So in my previous life, it was a global role. So we dealt with a lot of international regulatory bodies. And I would always say organizations in like Singapore, the MAS, the Monetary Authority of Singapore, their regulations are very, very tight. The Australian regulators, very tough to deal with compared to the US regulator.
Interesting. Yeah, we're more capitalist driven, I guess, more open market driven than the rest
Yeah,
of the world. Anyway.
And even when we talked about the crypto regulations and whatnot, I mean, the idea behind building regulations, there's been a lot of private public sector discussion with the U.S. regulators, and they're listening, and it's a collaborative effort, which is fantastic.
What's a more dangerous startup myth? We'll fix its compliance later, or our partner bank handles it?
It's both, really. Partner bank has it is worse than the first one. Fix it later.
What's the most underrated global compliance risk right now?
I would say sanctions.
Which fintech startup impresses you most from a compliance standpoint?
I don't know if I want to throw names out there right now, but I've seen some good
Maybe you can
ones.
talk about some of the qualities of that one that you're thinking of that, like, wow, they just got it dialed.
Yeah, because when you see a fintech that always talks about compliance as part of their culture, and I mentioned one of our clients, a few of our clients, taking compliance with them on a pursuit, and when they promote their products, that for me is a win. I think that's the ideal place to be in, because when you try to sell technology, payments technology, to another bank, first thing they're going to ask is, what is the regulator going to say about this? That's a great question. Hey, Ravi, our fractional CCO is here on the phone. Do you want to address that? And we talk about how that organization has built frameworks and the culture as it grew. So I think that's the place to be.
It's in the culture. Yeah. Best city for scaling compliance forward fintech in the world.
Say that again.
The best city in the world for scaling compliance forward fintech.
I'm still exploring Dubai and Singapore. Zurich has been fantastic, but I'm based out of New York, so I would say New York for now.
What's a piece of AML tech you wish existed when you were back at Citi or JPMorgan?
I would say case investigations or investigations, alert monitoring using AI technology. It's not fully there. There is at least level 1 alerts being screened through AI today, which brings consistency and a lot of the times the banks get tripped over when the regulators come and look at your cases and why certain alerts have been marked as false positives, mainly based on the analyst's personal beliefs or how the analysts performed the testing. And I think making that more consistent would have helped to get over a lot of the headache that we had.
What worries you more or keeps you up more at night? Bad actors or regulatory inertia?
Bad actors.
And if you weren't doing this, what problem would you be solving?
Great question. Getting a lot of kids educated, I think. I mean, I'm coming from Sri Lanka, and it's a third world country. We've seen a lot of kids who have, don't have the right resources, don't end up going to school, getting the education, and getting on the sidelines. I think that's a completely wasted resource. So,
Yeah. Well, I'm hopeful with the internet and ubiquitous mobile phones and AI that we'll see, lots of people kind of plugged into the global economy. I mean, I grew up poor as well, but I was lucky enough to be born in Seattle and
right.
had a strong social safety net, good public schools,
Exactly.
food stamps, free lunch, basically free college.
Yeah.
If I got in, which I did, yeah. So I can somewhat relate, to needing the infrastructure for all those kids.
Exactly.
I love that. This has been a great conversation. I learned a lot. I think I'm a better fintech investor for having you on the podcast. So I appreciate you. Where can folks find you online and get in touch?
DeRiskPartners.io. That's our website, and email address Ravi@DeRiskPartners.io.
Yeah,
Thanks. Love to hear from you.
Yeah, thanks so much, Ravi. It was really great.
Thank you very much, Brian. Thank you very much for having me.